Hello everyone, my name is Willard from Cofton Bond & Co. I am giving our market update for the month of August. So as winter draws to a close, there is snow in the Alps and the wattle is blooming. Many Australians will be soon receiving a sizable tax refund if they haven't already, which should help those ease the rising costs of living blues. Rising inflation, interest rates, and the focus attention in July, the US Federal Reserve lifted its target rate by 75 basis points to 2.25 to 2.5% to tackle the surging inflation of 9.1%. On the results front, 283 of the S&P 500 companies have reported results with more than 78% beating profit estimates, according to Reverton. At the same time, the US economy contracted 0.9% in the June quarter, following a 1.6% drop in the March quarter, technically entering the US into a recession, even though the commentary from the White House Council Economic Advisors member Jared Bernstein. There are real headwinds facing American households right now, but there are also some tailwinds. For example, consumer spending, very important, is 70% of the economy, was up 1% for this in the second quarter, and that's inflation adjusted. So how do we get a component of the accounts of that for almost 70% of the economy growing 1%, but you still have a negative GDP growth? Well, some of this weirdness of the GDP accounting, inventories shaved 2 percentage points off the GDP growth in the second quarter. How did this happen? Did inventories collapse? No. In fact, they grew to nearly over 80 billion. They just grew quicker than the prior quarter. Annualized headline CPI of 8.5% is also below the consensus of 8.7% and down from the June 9.1 print. This is seeing a bit of a rally in US markets with all the expectations being beat. The Coca-Cola CEO, James Quincey, had this to say about the recession environment. A typically recessionary pattern would be consumers initially stopping buying high-ticketed items, discretionary things. I replace the car later, I'll replace the mattress later, then they start saving on lower-ticketed items. We can see in some categories in some countries what looks like the beginning of that process. By contrast, Australia is performing relatively well. In the first economic statement, Treasurer Jim Chamberlain's downgraded the growth forecast to a solid 3.7% last financial year and 3% this financial year. Inflation jumped to 6.1% in this year to June, and is forecast to peak at 7% in December. And the Reserve Bank lifted the cash rate by 50 basis points to 1.35 in July, with a similar increase tipped this afternoon with an increase of 50 basis points last Tuesday. For more details within our market update newsletter, so please subscribe on our website if you haven't already. The world needs a lot of what Australia produces in terms of minerals, agriculture and energy, and we still have a very strong level of consumer demand, stated Andrew Irvine, CEO of Business Banking at NAB. Governor Philip Lowe has expected rates to get to at least 2.5%. Unemployment fell to 3.5% in June, but the rising price of interest rates dented confidence at ANZ. Roy Morgan consumer confidence sits at 82.4 points, below 100 is pessimistic. While the NAB Business Confidence Index fell 5 points to 1.4% in June, ANZ job ads for July is down negative 1.1% to 237,000 available positions. The biggest hit to inflation has come from housing and construction prices. Melbourne Institute Inflation Gauge for July headline a positive 1.2% over the month, to be up 5.4% on a year ago. Core inflation was up 0.9% over the month and is up 3.9% from a year ago as well. The biggest rise in the survey's history, pointing to inflationary pressures likely to continue into the third quarter. The rise in inflation for July is largely attributed to higher utilities and housing-related costs, including the increase in dwelling rents and housing construction costs. National house prices fell 1.3% over the month of July. Sydney down 2.2%, Melbourne down 1.5%. spooking some of the market, recording the biggest falls. Perth, Adelaide and Darwin house values have improved, but the housing market is cooling due to the rising interest rates. CoreLogic Research Director Tim Lawless has stated, the reality is housing prices declines are gathering momentum and is likely to decline phase will worsen before it gets better. Petrol prices are also easing, down at 19 cents. That's good for everyone's back pocket, to below 1.93 a litre in the late July, falling on global oil prices. The Australian dollar gained a cent to finish the month around 70 US cents. Across the Asian markets now, China has issued a warning to the US about the White House Speaker Nancy Pelosi visiting Taiwan, with the geopolitical concerns bubbling higher. Construction giant Evergrande misses the deadline for $300 billion debt restructuring plan. Chinese official manufacturing purchase managers index (PMI) fell to 49 in June from 50.2 in July, and below the 50-point mark separates the contraction from growth. The reading was the lowest in 3 months, with sub-indexes for output, new orders, and employment all contracting. This doesn't favour too well for our iron ore miners that supply them. The US SEC added Alibaba to extending the list of companies that face removal because of Beijing's refusal to permit American officials to review their auditors' work. Macau's casinos have suffered their worst month ever, with gaming revenues in July plummeting to the lowest on record. Gross gaming revenue fell 95% to just 398 pesos. That is 69.5 million Australian, the lowest since records began in 2009. And over to the UK, its home English women's football team wins the European Championship 2-1 over Germany, recording the highest attendance for a game for any men's or women's Euro tournament. HSBC delivered better than an estimate for profits, vowing to restore paying quarterly dividends next year. Adjusted pre-tax profits rose 13% to US $5.97 billion in the second quarter, driven by the increases in commercial banking and markets. Bank of England is considering the biggest rate increase in more than 25 years this week. And that is all. Thank you for tuning in, and more next month.